Hey, what's going on, my peeps out there? It is February the 1st. I'm telling you, 2022 will soon be a past of the thing, right? We're in the second month of 2022. As a matter of fact, January 24th was the first day that the IRS opened up their doors to accept tax returns. So, my question is, are you all ready to file your tax returns? I hope you are. And getting your tax return done, one of the things that you need is a checklist. Do you have all your forms necessary to file your tax return? All right. We're going to talk about that in this segment. All right. Because it is very important that you gather all of your important documentations so that you can get to your tax preparer, or if you're a self preparer, so that you can file your tax return and get a favorable tax refund. All right. So we're going to get into my top list of forms that you're going to need for this tax season to file your tax return in five, four, three, two, one. All right. For those who do not know me, my name is Cedric Jenkins, founder and creator of Your Money Matters. Your money matters because of the fact we get up each and every day to earn it. You have a God given right to keep it. So it is my purpose, my passion, and my intent to come out here and share with my people some content as far as how they can keep more of their money. It is not about how much money you're able to make, it is all about how much money you're able to keep. And what you're able to keep is what's going to make you financially wealthy. All right. And one of the great topics that I love to talk about because it is my passion, is also my niche of one of the ways that you can, the best ways to keep more of your money is tax strategy. All right. Now, it's February 1st. Okay. June 24th have passed. June 24th, the IRS opened up the doors to where now you can start electronically filing your tax return and they can start go ahead and processing them, right? Now, I will say this, the sooner or the earliest time that you can file your tax return, the sooner that you can get your return processed. And the sooner you can get your return processed, the sooner you can get your tax refund. So don't procrastinate, all right? But what I wanted to do in this segment is go over the forms that you're going to need to file your taxes for this year. Some of you all are self-prepared tax preparers, and some of them will take go to a tax professional to get their taxes done. Regardless of where you fall in, what category you fall into, there are some forms that you are going to need in order for you to file your taxes. All right. So let's get right into them. All right. Let's get right into it. Everything you need to file your tax return. And just like I mentioned earlier, all right, the sooner that you can get all your stuff together, gather together, the sooner that you can get your tax return process quicker. All right. And so the key to getting your tax return filed earlier is having all your documents in order and ready to go. All right. You don't want you, if you're preparing your taxes, you don't want to be fumbling around, procrastinating, trying to get your taxes done because you don't have all your documentation in order. You don't want your tax professional to take its time and fumble through it trying to get your taxes done, but you don't have all your necessary forms together. Get all your necessary forms together so that you can file on time so that you can get your tax refund sooner than later. All right. Now, one of the main goals for us as taxpayers, all right, when we're earning income, Our main goal is to find a way to lower our tax liability. Remember, I started off with this video saying that um, you it's not about how much money you're making or earning, it's how much you're able to keep of what you're making and what you're earning. See, we can go out here and get 2 or 3 jobs, work ourselves to death, get 2 or 3 side hustles, things of that nature. But if you don't understand that every taxpayer has tax liabilities, and your job as a taxpayer to find legal, ethical, and moral ways to lower your tax liability, you're not going to see all that money that you're earning. In other words, the more money that you make, the more money that Uncle Sam is going to take, because you're not using good tax strategies or tips to lower your tax liability. And that's the main thing for tax payers, is to lower your tax liability. There are 2 ways of doing it. You have tax credits and you have tax deductions. They both lower your tax liability, but they do it in 2 different ways. Okay, we're going to go over it real quick, and then we're going to go into the list of forms that you need to put together to prepare get your tax return prepared. But the 2 ways to lower your tax liability is being able to qualify for tax credits and tax deductions. So let's look at tax credits real quick. What is tax credit? Tax credit directly reduce the amount of taxes you owe. Okay, is a dollar for dollar reduction on your tax liability. All right, so it shows an example here, right? So let's say, I'll do it like this. Let's say that you have a tax bill of $2,000. All right. Now you qualify, and I'm just using these as numbers just to make an example how tax credit work. All right. Now you got a $2,000 tax bill. Now you qualify for a tax credit, let's say a child tax credit, and you're going to get a $2,000 child tax credit. Well, what's going to happen is they're going to take the $2,000 child tax credit, subtract it from that $2,000 tax bill that you owe, and then now your bill is $0. So now your bill went from you owing $2,000 to you not owing anything. That's because of the tax credit. That's how tax credit reduces your tax liability dollar for dollar. Okay, that's what a tax credit does. Now, tax deduction, on the other hand, works different. Okay, tax deduction reduces how much your income is subject to taxes. All right, deductions lower your taxable income by the percentage of your highest federal income tax bracket. Let me put it to you in simplest terms. All right, we're going to use numbers again. Let's say it's time for you to file your taxes. You get a W-2 from your employer. On your W-2, your employer said that you earned in a calendar year of $50,000. Okay, now, hypothetically, let's say that you qualified for at least $10,000 worth of tax deductions. What's going to happen is this: the $10,000 is going to be subtracted from your $50,000 that was reported on your W-2. All right. So now, instead of you being taxed on $40,000 of $50,000, I already gave the answer, you're going to be taxed on $40,000. And the reason being is the $10,000 that you qualify for in deduction is going to be subtracted from the $50,000 that you earned that was reported on your W-2. That $40,000 now become what we call adjusted gross income, or AGI. All right. We're not going to get into the tax bracket, all kinds of things, but in a nutshell, that's how tax deduction work. Obviously, there are tax bracket based on your income earning potentials, but for the most part, tax deduction works in that nature. Your deduction is going to be subtracted from your total wages, and then that difference, or what we call the delta, will become your new taxable income. All right. Now that we got tax credit and tax deduction out of the way, let's get into the listing. All right. Let's talk about the forms that you need, or the documentation that you're going to need in order for you to prepare your taxes. All right. Again, we don't want to wait to the last minute to get these documents put together. Now, I do know that the IRS is sending out some of the letters. Not all, you're not going to get all of them, but as soon as you get those letters in, put them in a nice, neat stack, like a folder or something, so that you can put your hands on it as you collect all of your documentation. And as soon as you got all your documentation, you can just pick up that folder and then start preparing your taxes if you're a self-preparer, or give that folder to your tax professional and they will in turn prepare your taxes for you. Okay. Now, let's talk about the list. Let's get into it. I'm gonna fast forward to this. All right, so here's the first thing. This is pretty obvious. W-2s for those who are employers, employees, shall I say. All right, your employer is going to send you a W-2. This is too easy. We all know that. Everybody gonna get them W-2s. As a matter of fact, everybody look at them W-2s as paper gold, right? Because of the fact of the perception is my W-2 is going to help me get a tax refund. For some, yes. For some, no. All right. It all depends on whether or not you qualify for tax credits or tax deduction, to where your tax liability is lowered. Think about it like this. The more you lower your tax liability, the more you give yourself chances for your tax refund to increase. They don't increase automatically, magically by itself. I think that's a huge misconception. Now, before I became a tax professional, I used to have that mindset, as far as, well, I should be getting a tax refund, but not knowing and understanding how taxation works. You have to lower your tax liability in order for you to see a refund. If you're not lowering your tax liability, you are not going to see a refund. All right. So W-2. All right. That is very important for those who are employees. At least 80 to 85% of the of taxpayers are employees. So W-2 is one of them. All right. 1099 NEC. Okay, these are the people who have side hustles, or have a business, or what have you, right? So you will get a 1099 statement in the mail. Now, if you earn anything in upwards of $600 or more, you will or should get a 1099. Okay, 1099. Now, this one is somewhat new, 1099K. Now, this came when the pandemic hit. All right. This really came when the pandemic hit. A lot of us lost our jobs, and then we became freelancers. We started working from home because of shelter in place. The lockdown and all that good stuff. So we had to find other ways of earning income. And the government saw that, right? And so the government understood that, hey, we got people earning income and they need to earn income, but we didn't have a way to track that income so they can pay their fair share of taxes. So now they came out with a new law to where if you a gig worker, meaning you using or leveraging the internet source to earn income, or you using other means of the gig economy, such as if you're Uber or Lyft or Airbnb, those are considered gig workers. You're going to get a 1099K, and you have to file that on your tax return. All right. You have to file that on your tax return. Something else I wanted to say about this with the 1099K. This is where the government wanted to make sure that everybody's paying their fair share of taxes. If you were receiving income through third-party networks such as Venmo, um, PayPal, or Cash App, or what have you. If those were business transactions, okay, if they were business transactions, to include credit cards too, those are business transactions, you're gonna have to report that on this form, 1099-K. All right. So that's another form that you're gonna need to get together. So if you participated in the gig economy, all right, Uber, Lyft, Airbnb, e-commerce, there's a whole list of gig economy industry that you can be involved in. But if you was involved in any of that stuff, then you're going to get a 1099-K. All right, put that aside. Here's the next one: other 1099 forms. Okay, these are 1099 INT, which is 1099 interest, and the other one is 1099 DIV, dividends. These are people who have money in the stock market, okay? And you've grown capital gains and dividends. Well, those capital gains and dividends, you do have to pay interest, or you have to account for that, okay? You do have to account for that. Now, you do have to pay a little some taxes on capital gains and dividends, but it won't be as much as if you was a W-2 income earner. All right, capital gains and dividends, that's you pretty much only going to be taxed between 5 and 10%. Top mainly 10%. All right, 10% on capital gains and dividends, but those going to be reported on 1099 INT and 1099 DIV. So if you are an investor, if you're a personal investor, you have stocks in an IRA or a mutual fund, okay, or any other stocks. All right, those are going to be reported on a 1099 INT or a 1099 DIV. 1098. These are for people who are mortgage owners. All right, if you are a mortgage owner, you're going to get a 1099 INT from your mortgage company. On this form, you're going to see year-to-date total for all the interest that you paid from your monthly mortgage. Okay, from your monthly payment that you pay to your mortgage. The interest piece of it is deductible. The other thing that's deductible from that 1098 is your property tax. Okay, they're going to give you a little bit savings. All right, but any little savings that you can get, you need to go ahead and report it. Okay, again, your whole goal is to have a way to lower your tax liability as best as you can, so you either don't have a huge tax bill, or you can get a favorable tax refund. But none of those two things happen if you're not putting yourself in a position to lower your tax liability. Now, if you're a renter, you don't have this luxury of claiming this form because you are a renter. This is only simply for those who have a mortgage. All right, 1098. Here's another 1098 form. This is a 1098 education. All right, 1098 education. This is for those who are in school. All right, student loan interest. Student loan interest. All right, so if you get a 1098, if you are a student, you should be receiving a 1098 E. This comes from student loan interest. So put that aside. All right. We're going to continue. 1098T. This is another educational tax credit, if you will, right? This is another educational tax credit. So again, if you're a student and you have tuition cost, things of that nature, it will be reported on a 1098T. Okay, make sure you put that form aside for those who are students. All right, here's the big one right here. This is a new one. you're gonna get an IRS. You're gonna get a letter from the IRS, letter 6419. For those who received a child tax credit payments, all right. For those who received child tax credit payments from the previous year, you should be getting a letter from the IRS, which is a form, a letter 6419, showing how much you received, total dollars that you received, and it's also going to show the number of dependents used to calculate that payments. Now, those two pieces of information is going to be plugged into the tax software. Your tax preparer is going to your tax professional is going to know what to do with it. If you're a self-preparer, they're just going to ask you the question in the software, whatever software you use, whether it is Intuitive, TaxSlayer, whatever the case may be. It's just going to simply ask you the question: how much did you receive in child tax credit payments? All right, and it's probably going to also ask you how many children that was used to calculate it. You just need to plug those numbers in, and then it's and then it and that's all you need to do. But you need to have that letter so you can put the accurate number amount in there. You don't need to be guessworking, trying to guess what those numbers are. You need to get this letter. Make sure you get this letter and file it so that you can accurately report how much payments you receive, total dollar value, and the number of children that was used to calculate those payments. Here's another one, letter 6475. Okay. This is for those who received a stimulus check. All right. I think there was at least 3 of them that came out. Some of you all got all 3. Some of you all maybe just got 1, or maybe you just got 2, depending on your financial circumstances. All right. But regardless how many you received, if you receive 3, you probably will receive 3 letters, or you may receive a letter with all 3 amounts in one letter. I don't know how the IRS is going to do it. I'm not that plugged into the IRS. I don't work for the IRS. I'm just an advocate for the people, to the IRS. All right. I don't work in the office. I don't know how they're going to send out the letters. I just know they're going to send out a 6475 to show and illustrate the amount, the number of stimulus check, the amounts that you received. Again, this is another one you don't want to guesswork in, because they want the exact amount. Okay. So look out for that letter, file it away. Right. We're coming in the home stretch. So going back to letter 6419, again, that is for the advanced child tax credit payments. If you don't receive that letter, okay, here's a website that you can go to. It's an irs.gov website. All right, I'll leave that up there for a second. You can go in there and create your account. And then once you create your account, you can check on your status yourself to see as far as the letter. It may also allow you to download your own letter. I didn't do the research on it. I probably should have, but I do know you can go in there and create yourself an account. Don't wait on your tax professional to do this for you. All right. Be proactive. This is your tax return. You need these documents. Be proactive and get these documents yourself. If they don't come in the mail, go to this website, create yourself an account, and then either look to see whether or not they'll allow you to download it straight from the IRS website, or you might have to submit a request for them to get them mailed out to you. All right. But don't wait on your tax professional. For those who are who going to have tax professionals do their tax return, don't wait on your tax professional to do this. You do this yourself. This is your tax return. This is your responsibility for getting all the necessary documentation to get to your tax professional to get your taxes done. I think I done harped on that enough. All right. Same thing for letter 6475. Right. If you do not receive this in a timely manner, here is the website for that as well. Go out there and create yourself an account and check to see whether or not if you're able to download it straight from the IRS, or put in a request for them to mail your letter. All right. Now, coming to the home stretch. Social Security. These are the simple form of documentation that you need to give to your tax professional. Social Security numbers for your family members. All right, dependents to include yourself. If you're married, all right, you need that for your spouse as well. If you got children, you need that so you can claim your dependents. Okay. Contributions. Okay. If I mentioned earlier about capital gains and dividends on being reported on 1099 INT and 1099 DIV, but also let's say that you have a retirement plan that you contributing to. All right, you're gonna get a statement as well to report that as well. Okay. Your contributions for your retirement is tax deductible if anyone did not know that. All right. Okay. It is tax deductible. All right. But you do need to collect that documentation for it. Okay. Charitable donations. Right. Let's say that you have a ministry that you donate to, whether it be towards your church or a nonprofit organization. Charitable donations. All right. Make sure you keep good record keeping of your contributions so that you can um, you know, report it or claim it on your tax return. Make sure you keep it close by in case you get audited, because not too often charitable donations don't get a black a weird eye unless it's an enormous amount. But the IRS knows what's a red flag. All right. So, but still keep all your documentation filed away so that in case it get audited, you have it. Plus, your preparer will need it as well. Okay, your preparer is going to need it as well. So I know preparing your taxes, it gets a little. I know sometimes I used to get a little headache when it's time for me to file my tax, but that's because of the fact I wasn't organized, right? I didn't know what forms I needed in order to get my taxes done. I didn't know whether or not if I was going to have a bill versus getting a tax refund. But now that I understand how taxes work, and then now that I was able to formulate a tax plan, a strategy to execute, now I no longer wait to the last minute. I do all my record keeping. So right now we in the new year, okay, 2022. Record keeping for you should be starting January 1st. Okay, your tax plan or your strategy should start January 1st of this year. Tax planning does not start or get executed at the end of the year, ladies and gentlemen. I'm going to say this one more time because this is a pet peeve of mine as a tax professional. Taxpayers, you execute your tax plan and your strategy at the beginning of the year throughout the course of the year. This is how you get favorable tax refunds. But too many of us expect to get a favorable tax refund and didn't do anything the prior year or the prior months. And you want the tax professional to pull a rabbit out of their hat. I don't want to vent on this, but that's not how it works. All right. To get a favorable tax refund, it takes a collective effort of the taxpayer and the tax professional. The tax professional, their job is to provide or devise a tax plan for their clients. Okay. A blueprint for their clients for them to go out there and execute. Well, it's the taxpayer's responsibility to execute the tax plan that they received from their tax professional. Okay, that's how this works. It's a meet in the middle kind of thing. Not all the onus is on the tax professional. Not all the onus or the responsibility is on the taxpayer. The responsibility is shared. All right. The tax professional can't do no more than what the taxpayer give them in terms of documentation. Hence why we're going over this tax prep checklist. Okay. Now, for those who did not know, I used to prepare taxes starting back in 2015. I got a little frustrated with my business. Then I took a hiatus, like a 2-year hiatus, and I started back into preparing taxes. But however, during my 2-year stint, I had to I got with a mentor, several mentors, to kind of help me get a better look at how to provide services to people in terms of taxes. And what I learned that there were some things that I was not doing correctly, right? And so now that I got a better perspective on how to service people, now I'm back into the game. But so now, because I'm back into the game, I don't only do tax preparation, I also provide other services. These are my services: tax preparation, individual and business tax planning. I will soon be adding tax resolution and tax representation. I do offer virtual CFO services, bookkeeping and payroll, and capital consulting. All right. So for those who are looking for a tax professional, all right, you have some tax and accounting needs, allow me and my team to service those needs for you. If you already have a tax professional, by all means, put this checklist together and put all your forms together, and then make sure you have everything that you need to give to your tax professional. All right, your tax professional is gonna love you if you have all these forms put together and ready to go. Please, ma'am, please, sir, don't come to them. Don't go to your tax professional without these forms and expect them to prepare your tax returns for you. You just tie their hands when you don't provide those necessary forms. Okay. But for those who are looking for a tax professional, maybe you going through, you transitioning from one tax professional to another, and you're looking for one, please allow me and my team to service your needs. Here's my contact information. I'm also going to put it in the chat screen here to where you can see it as well. You can reach out to me if you want to personally email me. There's my email address. There's my contact number as well. But if you want to sign up for any of my tax and accounting services, there's my link there, cedrictjenkins.com/services. On that page, you will see 2 buttons. One button is to schedule an appointment for a free consultation. There's another button to where you can sign up for any of those services that you see listed here. Okay. So that ends this presentation. I hope you are able to get something from this presentation in regards to what are the necessary things that you need to have in your checklist to give your tax professional so that they can get your taxes done for you. All right. So let me stop sharing my screen so you can see my face, because I know some of y'all probably think this is not a real live. This is a real live person that's talking. All right. So this is your Cedric Jenkins, founder and creator of Your Money Matters. Your money matters because of the fact we get up each and every day to earn it. Remember, you have a God-given right to keep it. Use your checklist to keep more of your money. All right. It doesn't happen automatically, ladies and gentlemen, kings and queens. It doesn't happen automatically. Your job as a wage income earner or let me just say income earner, whether you're a business owner, whether you work for someone, whether you're a freelancer, a hustler, a gig worker, whatever the case may be, if you're trying to get that money, your whole job, your number one job is to find a way to lower your tax liability. If you're not trying to position yourself to lower your tax liability, you're just giving your money away to Uncle Sam. And Uncle Sam doesn't mind taking your money, because when he does, he automatically becomes an investor And now he gets the capital gains and dividends because he's going to put that money in the market. And when the bell rings at the end of each day, wealth is being distributed for those who are in position to receive. And you have to be an investor in order to get wealth get wealth distributed to you. Well, the IRS becomes a wealth receiver because they are an investors. They just took the money that you gave them and automatically became an investor. Now wealth is being distributed to them. Now they get the capital gains or dividends when it should be going to you. All right. So let's put ourselves in a position to where we can keep more of our money. I hope y'all found some value to this. If so, by all means, share, like, and comment to this. And y'all be safe out here. All right. We'll holler at y'all later. Y'all be blessed. Peace.